We found an interesting pattern in Amgen's chart, and today we'll be focusing on its potential decline over the mid to long term. Subscribe if you want to get more videos like this one right after we publish them. On February 1st, Amgen reported its full year 2017 results. On a non-GAAP basis, the California-based biotech giant earned $12.58 per share, an 8% increase from 2016. But instead of celebrating another year of strong business performance, investors punished the stock, which fell from an all-time high of $201.22 to $168.45 between January 29th and February 9th. The sell-off was probably driven by the company's earnings miss in the fourth quarter, or maybe it was the poor guidance for 2018. In our opinion, investors only used these as an excuse to get rid of the stock. The real reason for the decline, we believe, was the market itself, which was already anticipating bad news by the time Amgen's report became public. Trouble is, the Elliott Wave principle suggests this was just the beginning of an even bigger pullback. The weekly price chart of Amgen shows that the uptrend from $39 to $201, which has been under construction for almost 10 years since March 2008, took the shape of a 5-wave impulse labeled 1 through 5 in brackets. Wave 3 in brackets is extended, but the 5 subwaves of the ending diagonal pattern in wave 5 in brackets are also visible. The bad news for Amgen stock investors is that according to the wave principle, this pattern should be followed by a 3-wave decline whose targets lie near the support area of wave 4 in brackets. That wave ended at $130 in late September 2015. With the stock currently at $182, we can expect another $50 to disappear from the share price. To reinforce the negative outlook, the MACD indicator shows a bearish divergence between wave 5 and 3 in brackets. We've also performed an analysis on the hourly chart of Amgen, which you can find in the article linked in the description. It also tilts the table even more in the bear's favor by revealing the impulsive structure of the plunge to 168.45. The weekly and hourly charts point in the same direction, so as long as the top of wave 5 of 5 in brackets at $201 holds, the bull's resistance remains futile. Give us a thumbs up if all this makes sense to you, and you can also visit us at ewminteractive.com for more videos and analysis on stocks, forex, cryptos, gold, and crude oil.